Our Leslie Pickers here at Post 9 with a very special guest to discuss. Hey, Leslie.
Hey, CQ. Thank you so much. We have Michael Nierenberg, who is the chairman, CEO, and president of Rithm Capital. And Michael, I have to say, I hadn't heard of your firm until last year. It really came on my radar in earnest when you prevailed against a consortium of well-known hedge fund investors led by Boaz Weinstein to acquire Sculptor Capital, which is formerly known as OXIF. You just reported your first quarterly earnings as a combined entity, and this was quite the fight. So I have to ask, given kind of your bread and butter in the real estate realm, whether it made it even more imperative to prevail in this takeover to diversify your portfolio, given what's going on in real estate right now.
First of all, thanks for having me this morning and having us. Yeah, I think it's the prevailing in this transaction or acquiring Sculptor was a very important next step for our business. And you hadn't heard of us. We are a mortgage REIT. It was formed out of Fortress in 2013. And in June of 2022, we acquired the management contract from Fortress. And then we rebranded here in August of 22. So the mission has always been to pivot from being just known as a REIT to growing into the alternative asset management space. I know Dan, I know Jimmy for both of those guys
Jimmy
for a long
Levin,
time. Yeah,
who's the CIO of Sculptor.
And it was, it was one of these things. It was a fight. It was the one thing we got to be is prudent and as we think about capital that we're deploying, and we thought we acquired a great asset and a great business for a very attractive price.
I want to talk about real estate because that is obviously making a lot of headlines this week in recent months over the last year, really. And Sculptor is out raising a $3 billion commercial real estate fund. Just yesterday, Treasury Secretary Janet Yellen had said that losses in CRE remain a worry, but that regulators are all over it. And today, once again, New York Community Bank Corp shares are down over these fears surrounding their CRE exposure, as well as some of the other peers of theirs that have some CRE exposure as well. How concerned are you about the CRE space right now, and how big of a potential systemic risk do you see given kind of your purview into this space?
So first on, I do think the regional banks are healthy. There's obviously some CRE exposure at the banks. The Fed has been pretty clear they want to cut rates. I do think it's a little bit early, but maybe part of the logic is to cut rates to help lower borrowing costs for a number of in the real estate space. When I look at NYCB, I think it's more of an isolated incident today. You look at some of the other large regionals, Fifth Third, Western Alliance, there's a number of these large institutions that I think are financially sound and should prosper as the Fed cuts rates down the road. On the CRE side, as we think about systemic risk or where we stand as an organization, we are we don't have any legacy real estate exposure. When you look at the Sculptor business on the CRE side, they have a real niche in the way that they invest capital. The returns have been fantastic over their the course of their 20+ years. So it's early. I know you guys have a lot of different folks that come and sit on the show. You have to be really thoughtful. We have dabbled a little bit in office here, recently at the Rithm level. And I think, we're in a period of time when investing we're going to see some of the greatest commercial real estate investing, I think, in our careers. You go back to the RTC days, going back to the early 90s, the dot-com period, you go to the great financial crisis, and here we are coming out of COVID. I think you're going to see some really attractive returns. So we're pretty excited about where we sit and the go forward here.